Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you back for another deep dive into the wild world of Wall Street. Today, we've got a lot to unpack with a blockbuster jobs report, geopolitical tensions shaking up oil markets, and some big moves in tech and energy stocks. Whether you're in for the long haul or just keeping an eye on short-term swings, let's break it all down and see what it means for your portfolio. Stick with me for the next 10 minutes as we navigate these choppy waters together. First up, let's talk about the headline that's got everyone buzzing, a stunning jobs report that shattered expectations. The U.S. economy added a whopping number of jobs in March, way above what analysts predicted, signaling that the labor market is holding strong despite earlier concerns. Unemployment dipped slightly, which is a good sign for economic resilience. But here's the flip side. Wage growth slowed a bit, and with rising energy prices due to tensions in the Middle East, there's a whisper of inflation fears creeping back in. For long-term investors like us, this mixed bag means the economy isn't cooling off as fast as some hoped, which could keep the Federal Reserve on edge about rate cuts. Short-term, this might fuel some market volatility, so keep your eyes peeled for how this plays out with Fed policy in the coming weeks. Moving to the major indexes, it was a bit of a mixed day on Thursday before markets closed for Good Friday. The S&P 500 eked out a small gain, showing some grit despite the uncertainty. The Nasdaq also nudged up, buoyed by tech, while the Dow slipped just a tad, reflecting some caution among investors. The Russell 2000, tracking smaller companies, actually outperformed with a nice little bump, hinting at some risk appetite in the market. Volatility, as measured by the VIX, cooled off a bit, which suggests the market isn't in full panic mode yet. For us long-term players, these small daily moves are just noise, but they do hint at broader sentiment, especially with geopolitical risks looming. Now, let's spotlight some big winners among large-cap stocks. Tech continues to show strength with names like Advanced Micro Devices and Intel leading the charge with solid gains. We also saw some optical tech players like Lumentum Holdings and Ciena Corporation absolutely soar. Some of these stocks are up big over the past week and month, riding the wave of data center and AI demand. Energy wasn't left behind either, with companies like Equinor and Eni benefiting from the oil price spike. For long-term investors, these sectors, tech and energy, are worth watching as structural growth areas, especially with AI and geopolitical-driven energy trends. Short-term, though, expect some pullbacks if oil cools or tech sentiment shifts. On the flip side, not everyone had a great day. Tesla took a hit, dropping significantly on weaker-than-expected delivery numbers, which spooked some investors. Other names like ASML and GE Aerospace also saw red, reflecting broader concerns in semiconductors and industrials. These dips can be buying opportunities for us long-term folks if the fundamentals hold, but near-term, Tesla's delivery woes could weigh on sentiment in the EV space. Keep an eye on whether this is a blip or a trend. Looking at the market movers, Nvidia continues to be a heavyweight with high trading activity and a modest uptick, showing sustained interest in AI-driven growth. Tesla, despite its drop, was also heavily traded, as was Intel, which posted a nice gain. Energy names like Petrobras and BP caught attention too, riding the oil wave. For long-term strategies, these movers highlight where the market's focus is: tech innovation and energy security. Short-term traders might see some choppiness here, especially with oil's volatility tied to the Iran conflict. Diving into the most active stocks by volume, Nvidia and Tesla again dominate the conversation, showing just how much investor interest is locked into these names. Intel and even Nike also saw heavy trading, alongside some smaller players like Nokia, which popped nicely. High volume often signals strong conviction or uncertainty, so for us long-term investors, it's a reminder to look past the noise and focus on the underlying business strength. Shifting gears to broader economic vibes, the ongoing war in Iran is keeping oil prices elevated, and that's rippling through markets. Energy stocks are getting a lift, but it's also driving up costs for consumers and businesses. Think higher gas prices and shipping surcharges, like the one Amazon just slapped on sellers. Plus, Trump's new tariffs on pharmaceuticals and metals are stirring the pot, with some industries still feeling the pinch a year after his initial trade policies. For long-term investors, this geopolitical uncertainty underscores the need for diversified portfolios. Don't get overexposed to energy or trade-sensitive sectors. Medium term, we might see supply chain shifts as companies adapt, which could create opportunities in unexpected places. Let's peek at the earnings calendar for this week. We've got some notable names reporting, including Nike, Lamb Weston, and Acuity Brands. These reports could give us fresh insight into consumer spending and industrial trends, especially with Nike as a bellwether for discretionary spending. No major surprises in recent results, but keep an eye out for guidance. Any hint at how these companies see the rest of the year could sway their sectors. For us long-term investors, earnings season is a chance to reassess core holdings and spot undervalued gems. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports. Checking out the top performers over the past week among large caps, Garmin and AppLovin posted impressive double-digit gains, alongside Shopify and Occidental Petroleum, which rode the energy wave. These weekly moves highlight pockets of strength, tech and energy again, which could be secular trends worth building positions in for the long haul. Short-term, though, some of these might be overbought, so timing matters. On the other end, we've got some weekly laggards like Genuine Parts and Rivian, both down significantly over the past 7 days. Okta and Atlassian also took hits, showing some weakness in software-as-a-service names. For long-term investors, these dips might signal a chance to buy into quality names at a discount, but do your homework on whether these are temporary stumbles or deeper issues. Wrapping up with sector performance over the week, industrials and consumer cyclicals led the pack with solid gains, reflecting optimism in economic recovery. Energy also shone brightly, no surprise given the oil dynamics. These sector trends are key for us long-term folks. Industrials and energy could be areas to overweight if you believe in sustained growth and geopolitical tailwinds. On the weaker side, healthcare lagged behind, alongside utilities and financials showing slight declines. These underperformers might be feeling the pinch from inflation fears and rate uncertainty. For long-term strategies, healthcare's dip could be a contrarian play if you've got patience for a rebound. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you make sense of the market's twists and turns. Don't forget to stay engaged with MarketSnap for more daily summaries and in-depth SWOT analyses to keep your investment game sharp. Hit that like button, subscribe, and I'll see you tomorrow for more insights. Until then, keep building that wealth.